you have to really understand what is your real risk tolerance and what is your real risk tolerance after the market has fallen by 10%, not after it's gone up by 10%, because we're all a little greedy, right?
And welcome into your game plan for retirement with Northwestern Ohio's resource for a common sense approach to planning for your financial investment, retirement future, what you should be doing or thinking about with your money to make that long-term progress and achieve your important financial goals. Chris McIntire here as our resource, ladies and gentlemen, president and founder of McIntire Retirement Services. Always a pleasure, Chris. How have you been?
Hey, not too bad, buddy. It's been a nice time, and you and I enjoyed a couple of days away together on a faraway island, and before it got drowned in 30 inches of rain, thankfully.
Yeah, made it out just in time. Got there for, I think, the perfect week because it had been a little rough the week before. We had a great week, and then now it is definitely getting that deluge rain and mudslides and all kinds of things over there in Hawaii.
Yeah, absolutely. And hey, buddy, I'm going to do a quick tip of the week if you're okay with that.
Absolutely, shoot away.
Yeah, so a lot of current events going on right now. Markets kind of whips on here back and forth a little bit. It should not derail your long-term investment strategy. Sometimes it's best to turn the headlines off there a little bit because, we get a bad day in the market followed by a good day in the market. And all in all, depending on what day you're measuring from and whatnot, we do a podcast, so some people are playing this back a little bit later, but the markets have not fallen off too significantly here whatsoever, given the craziness in the geopolitical landscape. So don't let it derail your long-term plans.
Yeah, when you turn on the news lately, Chris, it feels like every headline is about uncertainty, politics, geopolitical unrest, interest rates, oil prices, all kinds of things, and those are just like of the last week, right? And those kind of headlines are meant to generate interest and viewership and to go further into the news program, but they should not dictate your day-to-day investment approach, I think is what you're saying, right?
Yeah, absolutely. And we've lost some American soldiers in this conflict with Iran and Israel and whatnot. We certainly, some of them were Ohio National Guard members. So, may God bless their souls and give strength to their family. We don't want to discount that. But, it shows some of the might of the U.S. military. And I always like to add in, it's like, boy, if we could only spend all of this money improving our lives, around the world. I just don't mean the U.S. here, guys. But,
Yeah.
man, we spend a lot of money making machines that kill.
Yeah, indeed, indeed. And for investors and retirees, Chris, the challenge is not just understanding the news and the headlines individually, but understanding the context that headlines can feel overwhelming, but the economic forces that go behind them can sway the market day to day, but long term, it is still a great tool for growth and appreciation. And so understanding the big picture, I think, helps more than paying attention to each and every individual headline, Chris. But speaking of Iran, that certainly is a geopolitical event that we are paying attention to. What do you think all of this means for the energy markets and then for investors? Should we be taking a different approach or considering things going on over there for what we're doing here at home?
Yeah, it's hard to discount it by any stretch. And, we use so many different strategies that we have as investment advisors, that help mitigate some of that risk. I mean, we have safe money strategies that we use for people, anywhere from a money market to a CD to a fixed annuity to an index annuity, that are safe strategies. We have buffered strategies we utilize with our partners there at Brookstone Capital Management. We use structured notes that offer a significant amount of downside protection. And then basically, if somebody says, look, I'm a moderate investor, and that's typically moderate for today's purposes of the show. Let's say that's 60% stocks, 40% bonds, right? So your bonds are designed to help offset some of the sharp market sell-off that can happen with stocks. And then again, you own your stocks for that long-term appreciation to, keep up with the inflation side. So, you have to really understand what is your real risk tolerance and what is your real risk tolerance after the market has fallen by 10%, not after it's gone up by 10%, because we're all a little greedy, right?
Yeah, yeah. Well, I think there is a fear of missing out, right? Is that I was talking with a couple. They seem to have very different perspectives on things, Chris. Very different concerns. One had the fear of missing out on the opportunity for growth. The other had the fear of some of their money disappearing. And I said, look, with the same dollar, it's really hard to address both of these concerns. That's what diversification is all about. You set some of your money up for the opportunity for growth. You set some of your money up for protection against losses, and everybody gets a little bit of what they're looking for, but not exposed to all of the risk that the other one is concerned about, right?
Yeah, absolutely, buddy. And, in our grand scheme of clients that we have, accumulated over the last 25 years, let's say, I've got somebody with a great pension, brings in more money than they need and, than they can spend, and still doesn't want to invest in the stock market. And then I come out here to the other side, and I've got folks who, don't want any safe money. They want that long-term growth potential. And when I say don't want any safe, they may have some money in savings and checking. Obviously, we have a cushion in there, of course. But, we deal with a wide, spectrum of conservative to aggressive type of investors. And that's what's, the nice thing about being the independent. It's not, okay, let's put every square peg into this round hole. If we hit it hard enough, it'll eventually get in there. And that's not what we do as independent fiduciary advisors.
A customized approach, a customized portfolio construction and design specifically geared to your long-term goals and time horizon, specific strategies to help you achieve them, ladies and gentlemen. That's what the game plan for retirement is all about. That is the plan that Chris McIntire will help construct and put together with you, for you, and then help you implement and monitor along the way if you would like. If you'd like to take advantage of the offer to get your game plan for retirement put together, pick up the phone and give a call. 419-332-0532, 419-332-0532. By the way, that is a complimentary, courtesy, free of charge service to get that game plan for retirement put together, designed and constructed. And then you can talk with Chris about implementing that. Do you want to work together to make that happen and have a experienced, qualified professional side by side with you, monitoring it and adjusting it along the way? That is the continued service that Chris McIntire and the team at McIntire Retirement Services offer, with that fiduciary approach to clients' best interest, meaning they're putting your best interest first and foremost whenever constructing the plan, making recommendations, or monitoring and managing accounts. And that is an important distinction, of course, in the financial world. Again, if you would like to get that plan put together, 419-332-0532, 419-332-0532. You can also visit online, McIntyreRetirementServices.com, McIntyreRetirementServices.com. Chris, it does seem that geopolitical conflicts and events often seem to center around energy. I mean, that is our great driver, right? Is that dollars are the global oil reserve currency, but it is really the oil, the energy that at the end of the day seems to be the thing that drives economies and sparks international conflict, like what we're seeing. Venezuela, Iran, just a couple recent examples.
Yeah, absolutely. And the number one exporter of oil in the world is the United States, and people complain, and myself included, I don't want to pay $4 or $5 a gallon in gas, but I remember two presidents previously, said, we're going to get rid of oil. You're going to buy an electric vehicle. We're going and, you're going to pay more for oil because we're working its way out of the system. And, hell, the plastic lid on my Yeti coffee cup right here took oil to make that, and the clothes I wear, you're not getting rid of it, folks. I hate to tell you, watch Landman, if you will. But that being said, Peter, when you're talking about disrupting the Strait of Hormuz, it's not just oil that moves through there. There's a hell of a lot of more cargo and whatnot that goes through there also. We're, shipping around the globe. It's certainly a lot shorter to take, to go through the Strait of Hormuz than around the Horn of Africa. That costs more money. So the inflationary impact, that's where I was trying to get to here, Peter, is, if gas prices go up significantly, airplane tickets go up, cost of diesel fuel goes up, and I have a diesel pickup truck. But the refrigerators that are getting moved from West Coast to East Coast start costing a little bit more surcharges. So that's the other side of this. It could be that impact on inflation, and then do interest rates stay high because of that?
Yep.
You can't lower the interest rates if inflation is heading up. And so, a lot of things are happening in the uncertainty of what we're dealing with now. 6, 8 months from now, it may be, a distant, some of these things are distant concerns, given the fact that maybe the Iranians, do uprising, you get some regime change there, or at least some form of stability, if you will. But if you're a student of history, look what happened to Syria here recently. Pakistan and Afghanistan are firing missiles at one another. Pakistan actually, said that they are in a state of war. Now you got India and Kashmir. I mean, that whole area over there, does that spread? And let's hope not. Let's pray for peace. But, there are certainly a lot of geopolitical pieces that everybody's going to pay attention to this year as we head into the midterm elections, to add more geopolitical uncertainty to all of this.
But going back in time, Chris, I mean, international conflicts are nothing new. If we go back in just our history here, we had what 1950s with the Korean War, the Cuban Missile Crisis, the Cambodian invasion, Iranian hostage crisis, bombing Libya, the Gulf Wars 1 and 2, Afghanistan, and then bombing the Iranian nuclear facilities. All of those events had some immediate market disruption, right? Because the market reacts. It is emotional, but you look 100 or 200 days out from those events, and basically the market shrugged them off and said, well, this is kind of life in the world as we know it, and business as usual, and the market continues on its direction. Yes, there are certainly times where there's more pronounced and prolonged downturns, but it's usually not from something like this. It's more of a domestic economic cycle of things when those happen.
Yeah, 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 without a doubt. And, most of us have emotions, and we make, some people make their investment decisions emotionally based versus, long-term strategies that have been very successful over time. And, last year we had the tariffs that
Yeah.
went into place, and the market fell sharply in
Yeah,
April.
18 to 25% just in a week or so, right?
Yep, and we had calls from a couple of clients that I want out no matter what, get me out, and all of a sudden they missed a 12% rebound, and the market closed at record highs later on in the year. So sometimes the headlines are not necessarily indicative of the results of said action, if you will. And it's that knee-jerk reaction, right? Sometimes it's better to hit the pause button. And I can tell you that as being Scottish, right? It's like, okay, we have an instant reaction, and I find myself, all right, type that email, but don't hit the send button just yet, right?
Yeah, but your earlier comment though, Chris, I do think that these are like dominoes or interconnected pieces of the puzzle. The gasoline prices increase, transportation costs rise, manufacturing expenses increase, prices go up, consumers pricing and expenses rise, the purchasing power of the dollar falls. That's inflation, right? We've seen inflation here lingering stubbornly already a little too long, and that's really, I think, what hurts Main Street Americans. I mean, even going back to the Great Recession, right? That was a problem with the stock market and the mortgage-backed securities. But what I think really hurt Main Street Americans was that gas prices were still $4 and $5 a gallon from Katrina for like 3 years.
Right. Yeah. And, and New Orleans lost half its population, and what happened to their municipal bonds and all of that. So yeah, there are certainly a lot of long-term impacts. And if we look at this, since we're having this geopolitical discussion here today that relates to investments and interest rates and everything, is, we don't have a whole lot of allies that have jumped in behind us on this. It's the U.S. and Israel, and we're not getting the support from the United Kingdom and Spain and some of our, longtime allies, if you will. If we're, and so what does Russia look at this? How are they looking at this? And when we were in Hawaii there, Peter, we met a nice lady from Poland, and I said, what do you think of what's going on in Russia? She's like, people in Poland are scared. We know what Russians can do. So I mean, there's a heck of a lot of uncertainty that thankfully we have an ocean that away from a lot of that, and missiles and things like that can't necessarily strike us. So we get that's relatively calm, and that's why I watch a lot of the news out of the BBC, just so I can get what is their take on everything that's going on. And it is certainly a little different than what you see off of watching, Fox, or I full disclosure, I'm not a CNN guy or MSNBC. I watch business channels, but I get my news
I like
elsewhere.
flipping back and forth. Seeing the different perspectives.
Yeah.
One has a slant all the way one way, one has a slant all the way the other way. Truth usually lies somewhere in the middle, right, Chris?
Yep, I would certainly agree with that. And, that's why, like, I read the Wall Street Journal, watch the Bloomberg channel, CNBC, Fox Business. That's kind of where I get my take on things there. Yeah, broad base for sure.
Well, all of them have certainly had an element where they're discussing market volatility and why markets are reacting, Chris. And here's where I think the point of our discussion and program is that markets have always been volatile. Day to day, that is just a state of the market. But Chris, if we've got a plan in place, rather than panicking when we see market volatility, maybe we look at that at a different perspective, from a different angle, as something that could potentially be an opportunity, or at least something that we were prepared for.
Yes, yeah, without a doubt. And again, that's why constructing this portfolio, having conversations with the clients and understanding where's their emotions, where's their real risk tolerance, and is there a drive for a safer strategy or even a more aggressive strategy when the market drops down, right? I mean, then you buy low, you sell high typically.
Yeah. And again, a long-term strategy dictated by a plan can help you identify those opportunities or be prepared for those moments of volatility. And where everybody else is panicking, usually there is opportunity. As Warren Buffett and many other famous investors say, when everybody else is panicking, that is the time to buy. But Chris, market volatility, if that is something that we don't have the stomach for, if we are in the phase of life where maybe we should not take as much risk as we once did, that's something that we need to assess while markets are still doing well. And yes, we've heard the news headlines about this volatility, but we're still within like a very close range of all-time highs. We've seen some down days, but then we've seen some up days right there afterwards. So now is still a good time to assess the risk that we're taking and get our plan in place.
Yeah, absolutely. And historically, in the second year of a 4-year presidency is when the markets have its most volatile times for whatever reason. And so we are in the second year of the Trump presidency, and it's kind of Trump 2.0. So, this may play out a little differently than historical standards, but we come into these fall elections here, and typically you see a reversal in the powers, the party in power. Forgive my stuttering there, guys. The party in power typically loses the House, the Senate, or both, and that remains to be determined. And typically the markets don't mind that, right? They like divided powers because there is no sweeping regulation that they have to reinvent their business model. And I think it's probably fair to state that the Trump administration is very pro-business and wants to deregulate, and sometimes the party on the other side is more of a regulatory, setting standards and whatnot. And we're not making an argument who's right or wrong here for on the radio show here.
Well, where those big legislative changes often come into play, Chris, is the tax code, and how and when and where and how much of our money we actually get to keep. Now, this is another thing, maybe not in the headlines, but in the forefront of everybody's mind this time of year, is that tax deadline. Maybe we've been proactive and already filed. Maybe that time is coming and we're procrastinating a little bit. But when we file taxes, it's not time to then forget about them. That is one of the most opportune times of the year to really look at and assess our planning and help to formulate a plan for the year and years to come when it comes to taxes, Chris. So again, maybe not one of those major news headlines, but something that we certainly should be paying attention to as far as a current event, if you will.
Yeah, absolutely. We talk about those Roth conversions as an example of a tax planning strategy. So, if we were to get a significant sell-off in some form of some sector of the stock market, for example, might be the consumer discretionary side, right? If things get a little bit tighter, people aren't going to be, you know, walking into Saks Fifth Avenue or whatever and buy things or a $6 coffee at Starbucks. So, sometimes those stocks can get depressed. That can make a buying opportunity. Or, if you own those stocks and they drop down in value, slide them into your Roth IRA and let them recover. And then you have tax-free dollars. That's a good analogy or a good example.
Of that proactive approach that a plan constructed ahead of time can help us identify when the moment is right and then act and seize upon again kind of silver lining on a gray cloud or opportunity when others are panicking. But that is what the plan allows you to identify effectively, ladies and gentlemen. If you'd like to get your game plan for retirement put together, pick up the phone, give Chris McIntire Retirement Services a call for that complimentary service of a meeting, of a conversation, of a consultation and strategy session, and then constructing your game plan for retirement. No cost, no obligation, just a call to get started. 419-332-0532, 419-332-0532, 419-332-0532. More in the headlines, Chris. I mean, and even prior to this Iranian conflict, is that we were seeing some slower economic growth, and we were sort of waiting for the Fed and signals from the Fed that they were going to continue to lower interest rates. The housing market has been very slow as a result of these stubbornly high interest rates here. And I think everybody has been holding their breath, waiting for those to come down. Now we've got some mixed signals on whether that's going to happen. And that's probably playing into market pricing as well.
Yeah, without a doubt there, Peter. And, I think we've talked for a couple of years here on trying to get this housing market opened up. And, houses are very expensive right now. The supply is very muted, and that keeps
Yeah.
prices elevated as well. And, I know the Trump administration here is just in the recent headlines, it may have even passed as we're, talking on the show here about keeping big institutions from buying individual houses and doing the VRBOs and things that they do, or putting them into their funds and creating income to help the pricing of that. I don't know if that's going to work. I don't think they're a big enough buyer in the marketplace, but I'm not an expert on the real estate market in Atlanta,
Uh,
for
uh,
example, where a lot of that happens.
Additional initiatives, though, Chris, to do away with the capital gains or the limit on the capital gains on your primary home sale. That could be a big stimulus kind of piece of legislation.
Yeah, it certainly could, especially, in higher net worth areas, like where Peter's at. But down in, yeah, say like, a lot of the Florida markets where they had unbelievable appreciation, some of the Atlanta areas where, people don't want to sell because they don't want to pay a capital gains tax, where if they did away with that, they're now all of a sudden, yep, they get to keep the profit that they made on their house. And, I always have an issue with that. It's like your house, you built it, you took the risk and all of that. Why do you have to pay the government 15 to 20% on what you made on it?
Yeah.
Maybe they should just spend less money, but that's not going to happen.
No, it is not, Chris. They tend to spend every dollar they bring in before they even sit down and whisper about spending money, and then they certainly like to talk about doing more of that every time they meet.
Yep.
Again, we're talking with Chris McIntire, president and founder of McIntire Retirement Services, ladies and gentlemen. This program we've sort of been hitting the highlights of some current events and some headline news and some things that are going on, but to the point, discussing why you should have a plan and why the headlines of the day should not dictate or determine your financial moves. Some of the worst days in the market, I mean, they happen quickly, but some of the best days happen right after many of the worst days, very often. And if you miss just a few of those best days, you have a completely different result. And that's why a plan will help you stay more disciplined and stay on track. Different sectors of the market will come into favor and out of favor at different times. And Chris, that's another big thing we've heard about, especially as we've begun the first couple months of 2026 here, is this sector rotation. Those magnificent seven and those big tech stocks, they have not been the high flyers of this year so far. In fact, more of the traditional value and stable companies have been the ones that have benefited the most.
Yeah, and and it was bound to happen because, the Nvidias, how can they continue to go up 30, 40, 50% a year after year? That's just not sustainable. The rest of the market then gets its chance to catch up. The international markets as well, prior to the Iranian whatever the operation they're calling that, but the conflict. I don't think anybody declared war. But, so the international markets had been lagging the U.S. for a long time. They had a good year last year, and we're off to a decent start this year. And hopefully all of that will continue. But it's better for most investors when the market is recovering and doing quite well across many different sectors, not just the tech sector. And like Peter says, it's nice when the healthcare sector, the finance sector, transportation and all that get clicking along at the same pace. Then everybody, rising tide lifts all boats, and instead of just the magnificent seven, for example.
Yeah, well, I think every generation, every decade, every year has its news headlines that brings concern and worry and uncertainty, and we've certainly seen our fair share of those just here in so far the first quarter of 2026. That's not going to change, though, ladies and gentlemen. Yet still, we need to make financial progress. That's going to be determined and dictated by our setup and the plan that we have in place. And from the information that you hear on the news, that should not determine your plan. You should sit down. You should sit with an experienced, qualified professional. Chris McIntire, your resource here, offering that service to have a conversation and help you construct and determine that plan, your game plan for retirement. And if you'd like to take advantage of that, offer an opportunity. Again, no cost, no obligation. Pick up the phone and give a call. Start the conversation. 419-332-0532. 419-332-0532. A plan in place will help you stay informed, but avoid overreacting and help you identify when opportunities present themselves. And one of the best ones is just for you to get started and get that plan in place. So again, 419-332-0532, or you can go online, McIntireRetirementServices.com, McIntireRetirementServices.com. So if you'd like the plan in your hands to have more financial confidence despite what the news headlines might bring, specifically if you'd like to learn how to generate more income, control, and pay less in taxes, pick up the phone. Those are big components of the game plan for retirement. 419-332-0532. Chris, always a pleasure checking in with you, getting your perspective on the long-term, reliable strategies, as well as the news of the day and what we need to be paying attention to.
Yay, my pleasure. Hope everybody enjoyed the show today. Take care out there, and may God bless America.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntyre. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.